Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale. This video is on investing in the stock market versus investing in real estate. Many times my clients ask me which one is better. And the truth is, it all depends on your investor profile. So tune in and let's make your money work for you. So the question here is your money more effective in the real estate market or in the stock market? We're gonna start with the real estate market. Real estate has three types of returns. The first return is the appreciation of the real estate. This is the increase in value of that property over time. The second is from cash flow of rental income. This is how much money you're collecting from your tenants. And the third is the tax depreciation deduction. This is a real cash value deduction that you get annually on your rental income. Stocks, on the other hand, have two types of returns, whether they are mutual funds, individual stocks, ETFs. The two types of returns are one, the appreciation of the stock, that is the increase in value over time. And the second is dividend income. Maybe. The reason why I say maybe is not every stock, mutual fund, index fund pays dividends. Dividends are small payments that are made to owners and shareholders of a company based on the income that that company made. So what you're looking at here is determining two things. Which one is going to make you a higher rate of return and which one is going to demand more of your time. The other night on Shark Tank, Mr. Wonderful said he loves his money to come back with prisoners. I thought that was hilarious. Basically, what he's trying to say is when he puts money out, he wants his money to come back with more money. Historically, over time, the rate of return on real estate has usually been better. However, it does demand more of the investor's time. Why? Well, you need to deal with tenants. You need to deal with repairs. You need to deal with maintenance. Even if you hire a property management company, this still eats into your profits, which is your rate of return. When you buy a mutual fund or an individual stock, you have zero hassle factor. It's as simple as making the purchase on your online brokerage. The reason why real estate usually has a higher return is because real estate is in an imperfect market. Wait, what? So a perfect market is where all buyers and all sellers have access to the same information. If you look at the stock market, this is as close to a perfect market as it gets. All buyers and sellers have access to the same financial information and who's in management and what they're planning on doing as everyone else does. Because if you have any kind of insider information, that's insider trading and that's illegal. Now in the real estate market, it's imperfect because sometimes the buyer has more information than the seller does. And sometimes the seller has access to information that the buyer doesn't have access to. So because the real estate market is an imperfect market, it gives you more of an opportunity to buy a bargain. And when you buy a bargain, which is basically buying low, and then you later sell high, that's where you make your rate of return. When done correctly, assuming no mishaps, any piece of real estate under $1 million could make you a return of almost 15%. If you look at cash on cash return, this is how much cash you put into the investment versus how much profit you're receiving back annually. You're looking at anywhere between 8 to 15%. If you compare that to the stock market, historically over the last century, the stock market has produced roughly a 10% return. Now, it's very important to note that both markets have had their bubbles. Everyone remembers the dot-com tech bubble when tech stocks were just ridiculously expensive. And everyone remembers the 2008 historic real estate crash. So while over the course of time, these things correct on their own, this is why it's so important to do research, and to really invest in something that you feel comfortable with and that you also have the time to deal with. And my last recommendation is really to surround yourself with great advisors, whether it's a great financial advisor or a great CPA or both. These are the people that you want in your corner when you're getting ready to make an investment. If you're looking for a CPA who is familiar with these types of investments and can provide great advice, that's us. Call our office at Accounting to Scale. To keep up to date with all of the information we're putting out, hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.